Some very interesting signals coming in, folks, on the NASDAQ and the SP500, right? And also Bitcoin as well. What's happening to the crypto markets? What's happening with the SP500? Okay, let's go, folks. This is Pablo He-Man. As we all know, it's been a massive week. So I have been warning for a while now that SP500 and NASDAQ, especially the NASDAQ, right, is about to pull back. Right now it's slowing down a little bit. How we're looking on that front? Well, something big has been happening during the week, right? If you're in my Discord, you would have known what's going on. And it is basically the US 30-year interest yields. US 30-year yields have been, right, so that's the US 30 government yields, basically the interest rate the US government pays when they want to borrow for 30 years. And look what's been happening, right? It's been basically about to punch into another new high, which is quite amazing, because if inflation has been falling, US CPI is now at around 3%. If US inflation has been falling, then why are yields for the 30-year still going through the roof like this, right? So as we can see, it was quite low, got to be below 1%, and then basically, it's been steadily climbing, and we thought, okay, interest rates have peaked because now inflation's coming down. But look at this, right? The 30-year is about to punch through. It made this large move, on Wednesday and Thursday, and pull back a little bit. But it looks, I'm thinking it could actually get to around 5%, which would be huge. That would be something we haven't seen since what? 5%. It would be something we haven't seen since early 2000s, right? 2007, 2008 area. This is all very significant. What's that got to do with the NASDAQ, and what's that got to do with the SP500 and Bitcoin, you say? Okay, so essentially, here's a concept that I've explained many times before for my viewers and to my Discord. Essentially, if you have to value, right, how much a stock is worth, you basically look at the US 10-year Treasury yields. That's what everybody looks at. And you use that rate, whatever it is, around 4%, 4.5%, 3.8%, whatever it is, to discount the cash flow that comes in from that company, Tesla, Apple, whatever it is, every year, right? Coming in every year. I mean, this is a very common formula that, Benjamin Graham and Warren Buffett, those guys use to value a stock, right? Whether it's Tesla, Apple, GameStop, whatever it is. So for those tech stocks, right, their earnings are more in the future because they're growing stocks. So therefore, the higher the US 10-year Treasury yield, the more their future income gets discounted, which means the more expensive they become in comparison. What that basically means is, in simple terms, if the US 10-year Treasury yield, right, goes up a lot more or makes a sharp rise, then the more as NASDAQ stocks like Tesla, Apple, Nvidia, Google, Microsoft seems to be expensive. If they seem to be expensive, then greater chance for them to pull back or even to go into a multi-year crash. Okay, let's have a look at where the US 10-year Treasury yield is. Very similar to the US 30-year Treasury yield. It's actually, right, made a big comeback, right? Breaking through out of this bull flag. I've been talking about this on my Twitter. I've been talking about this in my Discord for a while now. You've got to ask yourself, why is inflation falling, but long-term 10-year interest rates or 10-year yields actually rising? What are they worried about? Why are they not buying these US government bonds, right? And when it gets to high enough, like when it gets to around, say, 4.5, gets to around there, 4.6, that could easily crash the NASDAQ. We're not quite there yet. So what I've said to my Discord is basically, I think it is in the process of making what I would call a cup and handle. So here is the cup, right? Pull back and make a handle. Bounce around here, bounce around 3.9, might even go to 3.8, cup and handle pattern, and then eventually break through to high 4% interest rates, yields for US 10-year Treasury yields. And it's not just the rise of the US 10-year Treasury yields. Basically, a number of NASDAQ stocks, which we've been following, look like they're in trouble right now. Okay, first of all, let's have a look at, say, Tesla. So we've been talking about Tesla for a while now. Oh, where is Tesla? Let's see, Tesla. So on Tesla, my call was to short it at 300. You know, we got there almost exactly, right, at 299, 300, and basically I said the support is at 248, and now it's at 250. We're very close to the 248, 247 support line. Well, might go to 246, around there, 46, 47. Why is that? Because there's this long, rising trend line here. So we might get a bounce here. But however, it's possible this correction could continue. So short term, I'm looking for support around 236, 246, 247 on Tesla, and a small bounce. But however, let's look at the big ones, such as the largest stock in the world, if not just in the United States, Apple. So Apple, for example, as I have been saying, it basically reported earnings, and after earnings came out, it beat earnings, beat revenue, and it still tanked like 5%, gap down, and look at how big the volume is. So if beating earnings and beating your revenue expectations still can't make you go up, what can make you go up? I've been warning about situations like this because I've been saying that, my warning was that these stocks are so overextended for now. It looks like if there's any even minute, small little bit of disappointment, then you're going to see a very decent pullback, very good pullback on some of these stocks, because Apple, for example, it beat earnings expectations, beat revenue expectations for this quarter, but however, the revenue it delivered was still lower than a year ago. So that kind of small disappointment made it just dive down. Basically, the market is overextended. NASDAQ's been going on an extended run, and any disappointment can make it pull back now. And also, let's look at some of these other stocks that Google, Microsoft, for example, is the second largest stock in the world. Okay, it's hit almost a double top, right? Went slightly over, and now basically looking at a dangerous place, because see, you've got a number of bottoms around this 326 area. If it breaks this 326 area, then then we lose this major support, and Microsoft can go down to, I would expect, first stop 317, and even 304 is possible for Microsoft. So you have both Microsoft and Apple, pulling back, and these are the two largest stocks in the United States, in the world, in fact. Apple looks like it can go to about 170, about this lower 170s area for support. It might bounce first to close that gap, and then come down to about low 170s. Let's have a look at something else. Say, for example, Amazon. Okay, Amazon had really good earnings. So Amazon was shockingly good, and it jumped up 9% on the day. But look at how massive this volume is. And this was mostly sell volume, because see, it opened here, shot up, and got sold all the way back, and closed lower than where it opened, right? This is what we call top and tail. So next week, I expect Amazon to close the gap here all the way down to about, say, 129 to 129 around here. So 129, 128. And if it breaks this level, this 126 level support, could go all the way to 104, 105. But let's see how it behaves first. So my next target is 108, 128, 129, and see what it does at that level first. Then we can judge whether it can go lower from there. So overall, my expectations for NASDAQ and the SP500 haven't changed. Basically, I've been saying they're overextended. That was from my VIP video 2 weeks ago, and now I think they have been pulling back some, and I think the pullback should continue, because when we look at those largest component stocks of the NASDAQ, they look like they should be pulling back some more. I don't think the small bull run, I've been calling this a big bounce small bull all year, has ended yet. I think it's pullback, and then one more attack, and we're probably done for quite a long time. So this is the last what we call a kind of like a final rally, or a blow off top for the NASDAQ in the next few months, in my opinion. I'll update you guys more when that time comes. And by the way, this video goes out to my Discord first, and then after about 2 weeks, then after about 2 days, then I put it out into the public. So you guys will probably see it, a couple of days after my Discord. And now back to Bitcoin. See how Bitcoin is traveling. Basically, my thinking is Bitcoin has been in this massive rising triangle, rising wedge, right? Usually, rising wedge tend to break down, right? Let's say if this rising wedge breaks down, does it break down here, right? Or does it bounce from here, go up, and then go down? My thinking is Bitcoin probably hits this major support here because it's on this rising blue trend line, and it's on this support level, this 28.4 support level as well. So we can see there are actually two support levels, right? Two support levels for Bitcoin. One is this rising trend line, and one is this horizontal trend line, supporting level. And so my thinking is Bitcoin probably hits sometime over the next week or so, dips and hits this 27.8, might go lower to attack 27.9, 27.8 area, and then bounce up from there, and then hits the top of this rising wedge, which is around 34.5 to 35K area, and then turn down. So why this 34K, 35K area? Well, so remember at the start of the year, we spoke about this head and shoulders, right? So basically Bitcoin is in this massive shoulder, head, and shoulder, inverse head and shoulders, right? And basically the neckline is somewhere around here, around, right, 24,000, right? Which gives us a target, which gives us a projected target too, because the head to the neckline, right, is about 10K. So then it gives us another 10K from the neckline, from about 24K to 34, 35K, which would give us around there. And that would also hit the top of the rising wedge. So right now, the best estimate I have is basically go down to around just below 28K, like 27.8, 27.9. We can position for some buys around there, and for a bounce up to hit 34, 35K, and then turn down, following the NASDAQ, or maybe same time of the NASDAQ. That's the best, estimate for now. However, if things change, I will update you guys. Okay, one more thing I want to share with you guys is this stablecoin dominance. You've heard of Bitcoin dominance. You've heard of altcoin dominance. Bitcoin dominance is when the total market cap of Bitcoin, of all cryptos, right, goes up or down. It means is Bitcoin getting stronger versus altcoins or not. Now, stablecoin dominance means total amount of stablecoins is it getting stronger versus Bitcoin and Ethereum and everything else, or is getting weaker, right? Getting bit larger or getting smaller? Are more money going to stablecoins, or are more money going into Bitcoin, ETH, and all the altcoins? So here, let's have a look. This is the Bitcoin chart on log, and this is Bitcoin dominance. Stablecoin dominance. So the higher it is, the more money is in stablecoin and less money is in Bitcoin and altcoins. So just look at this. I've just drawn this channel here. Every time it hits the top of that channel, it means there's a lot more money in stable coins. That means people have sold, people have cash left standing on the sideline. Every time it hits the top of this line, look at this, right? That's being a buy signal. Hits the top of the line again here, right? March 12th, 2020. That's a buy signal here. Top of the line here, another buy signal here, right? Well, not quite, but almost. Another buy signal here. Hits the top here, another buy signal here. And as we can see, that's how it's worked pretty well. And then at the times when it hits the bottom, right, the bottom of the channel, which essentially means that there's less less money in stable coins right now. So because stablecoin dominance is going down right now, it means not a lot of money in stable coins. That means people have bought and bought and bought. And there's not as much firepower or money waiting on the sidelines, not as much ammo to come into the buying game. So let's have a look. Basically, we can see here that when it hits the bottom side, which means of this channel, which means stablecoin, stablecoin dominance is low, right? It tends to time the top, right? Time the top here. When it hits near the bottom channel again, right? Prices hit the top again, and again here it timed the tops at 64K, kind of pretty well as well, right? And then here once again it hits the bottom of the channel, and that's when Bitcoin hit the all-time high at around 64K, right? 69K, sorry. And then now we're hitting the bottom of that channel again. So does that mean Bitcoin's going to make a pullback? So now this signal we just looked at, it tends to work pretty well, as we just saw. But however, let's keep in mind, nothing is 100%. Nothing is 100% accurate. So we always have to keep a take it with a grain of salt, because it's in a rising channel, you see. Before the signal, like when a topping signal comes, it's when, right, when stablecoin dominance is only at 1%, right? Here, it was at 1.8%. Here it was around 2.5%. Here it was around 3.86%, and here is at 9.8%, right? It's actually, you know, what's there to say that stablecoin dominance can't actually go lower to say back to where it was again, to say 3.7%, 3.8%, right, or 2.8%. That's possible. If it did that, that would mean Bitcoin and crypto would just take off. So it's an interesting statistic to look at. It's an interesting signal to look at. It's something to keep in mind. It shows us that even though with all these positive news coming out about Bitcoin adoption, with Wall Street opening up all these Bitcoin ETFs, there is still a possibility that the market is overbought, and it leads us to think what would happen, right, if Bitcoin was to pull back right now. And if Bitcoin was to pull back, then I would look for it to break down here, or possibly bounce off here at 34, 35K, and then turn down. So once again, I'm not going to preempt what happens in the market. Let's just wait for the market to prove itself. Right now, I'm expecting a bounce off this 28K, 27.8K level, right? And then bounce up. But however, be prepared if it does break down there, right? Then the stablecoin dominance is telling us that this could happen. Just keep that option in mind. Nothing is 100%. It just reminds us that in this game of trading and investing, everything is about risk management, right? Never going 100% or all in on anything, even though if you're very, very bullish on Bitcoin or the NASDAQ. So this is Pablo Heyman again, and I will update you guys on more progress and more clues that the markets are giving to us as time progresses. Okay, catch you guys next time.